Hey everyone, welcome back to Corporate Decoder, the place where we turn complicated corporate filings into something you can understand. Today we're diving into a report from No Labs, and trust me, it's not as simple as knowing something. Let's just say there was a meeting that wasn't meant to be. This filing is a Form 8K, which is basically a snapshot of important events that a company needs to tell the SEC about right away. Think of it as corporate news flash. This report is from No Labs, and the event they are reporting happened in February of 2025. No Labs is a Nevada corporation with the ticker symbol KNWN. Keep an eye out for that symbol when we talk about trading later. Now, the big news. First, they are talking about another document they filed. It was a proxy statement, which is a document that asks shareholders how they want to vote on important issues. This proxy statement was about a special meeting where shareholders would vote on whether to do a reverse stock split. A reverse stock split is when a company reduces the number of its outstanding shares, increasing the price of each share. In this case, they were considering a split of up to 1 for 15. This means every 15 shares you own would become 1 share. But here's the twist. The company's board decided to cancel that special meeting. So why cancel the meeting? Well, it turns out they didn't need shareholder approval for something else they did, which made the vote on the reverse stock split unnecessary. This something else was a different reverse stock split. Instead of a split of up to 1 for 15 that the shareholders would vote on, the board of directors approved a 1 for 40 reverse stock split. That means for every 40 shares you owned, you now owned 1. They didn't need to ask the shareholders to approve this because of Nevada state laws. The board of directors has the authority to do it if they proportionally reduce the authorized shares. The Financial Industry Regulatory Authority, or FINRA, announced the reverse stock split in February. After the announcement, the stock began trading on the OTC Pink market on a post-split basis. The new trading symbol was KNWND, but only for 20 days. So let's recap the events. First, the company wanted to potentially do a 1 for 15 split and called for a special meeting for shareholders to vote. Then the board decided to do another 1 for 40 split. Then the company canceled the meeting because that vote was no longer needed. The company also issued a press release announcing the cancellation of its special meeting of stockholders. Usually, this type of announcement contains forward-looking statements. Forward-looking statements are statements about the future, not about things that already happened. Because the future is not set in stone, these statements are always subject to change and may not be 100% correct. This is a very important factor to keep in mind when reading reports like this one. So what does all of this mean? Well, a reverse stock split can be a sign that a company is struggling. It can make the stock price look better. However, the underlying value of the company hasn't actually changed. Think of it like cutting a pizza into fewer slices. You still have the same amount of pizza, just fewer pieces. Now let's zoom out and look at the bigger picture. Based on just this report, it's hard to tell if No Labs is truly on the right track. Reverse stock splits are generally not seen as positive moves and might reflect underlying challenges the company is facing. The cancellation of the special meeting also adds a layer of complexity to the situation, leaving investors to wonder about the company's strategy and decision-making process. While there are some potential upsides, it's equally important to consider the risks before investing. One of the biggest risks with companies doing reverse splits is that it doesn't really fix the problems that made their stock price low in the first place. If the company doesn't improve its business, the stock price could drop again, even after the split. Another thing to consider is that some investors might not want to invest in a company that has had to do a reverse split, which could make it harder for the company to raise money in the future. On the bright side, if No Labs can successfully use the reverse stock split to attract new investors and improve its financial performance, it could create some opportunities. For example, a higher stock price might make it easier for the company to get loans or issue new shares. It could also make the company more attractive to potential partners or customers. In conclusion, No Labs' recent actions present a mixed bag. While the reverse stock split could offer some short-term benefits, it's essential to look beyond the surface and assess the company's long-term prospects. The key to the company's success will be whether it can address its underlying business challenges and create sustainable value for its shareholders. If you found this breakdown helpful, please subscribe to Corporate Decoder for more simple explanations of complex corporate filings.